Today we're going to break down a misunderstood part of condo buying, what banks actually look for when reviewing your condo documents. Most buyers only focus on the unit itself, the view, the layout, the parking, but lenders, they're looking at the entire building just as closely because at the end of the day, if something goes wrong, they're the ones that are stuck with the property. So let's get into what happens behind the scenes when lenders analyze your strata or condo documents. So first up is the Form B, and this is basically the cover page of the whole strata package. Lenders use it to confirm whether there are any lawsuits in the strata corp, what are your monthly strata fees, that'll be identified in the Form B, and how much money is in the contingency reserve fund. Also, does the building owe money like a strata loan, and how much contingency reserve money exists per each unit. So this one document alone can either give your approval the green light or potentially raise some red flags that will trigger further review. So yeah, in BC it's called the Form B. In other provinces it could just simply be like a status certificate. It may have another name, but Form B in Vancouver. The next document lenders look at are the meeting minutes, and these tell the story behind the scenes, kind of like the politics of the strata corp. So they're looking for things like, are there fees rising? Is there talk of any fees that may be rising, strata fees? Are big repairs being delayed, or are they being put forward? Is there drama in the strata council? As I mentioned before, the politics. Are the same issues popping up every year? So things like that they look into with the strata minutes. Sometimes the way a building is run matters more than the building itself. Next up, then the lenders look also at the budget and financial statements. And in that, they're looking for, they deep dive into the numbers, and they're looking if the fees are realistic, the monthly fees. Are they contributing enough to the reserve fund? That's another thing they look into. And is the building preparing for future repairs? A building with quote unquote cheap fees, but no money saved is far riskier than a building with slightly higher fees and solid reserves. And finally, probably the most important document of all, the depreciation report. This one is pretty critical. It's very critical. It shows a 30-year plan for the building, including upcoming major repairs, how much they'll cost, whether the strata is actually following the plan. And they also look for like a few funding models the lenders expect to see, or the lenders and insurers expect to see in there. And that could be like a baseline type of model, or an improved or full funding model. If there's a huge project coming up and there's no plan to pay for it, that could be a major problem, especially if you're buying with 5% down or already stretched debt ratios. This could absolutely cause a lender to back out. And in some instances, it may be a reasonable repair that's coming, but depending on the profile of the applicant, like I said, if you're going in there thin with 5% down payment, and the debt loan is your debt load is maxed up, not much room to fall back, the insurer and the lender may make the decision and say, you know what, this property isn't right for you. It's a good property, but we see some pending special assessments coming, and we feel that you're not in a position to handle that. So it doesn't necessarily mean that the property is bad. If the insurer declines it, it just may mean that they believe it's not a good match for you and that property. And then further, there might be some extra reports that the lenders and the insurers will look at. And sometimes, they'll dive a little deeper into the engineering reports, or maybe the building envelope condition assessment. This happens more often with older buildings or ones showing visible wear. It gives the lender a deeper look at structural health and remaining life of the key components. Now, here's the part where people often get blindsided, especially buyers and even some realtors. They'll say, the lender never asked for strata docs on my last deal. but that's not true. Every lender reviews condo documents every single time. The only difference is who does the review. The lender reviews them up front in several cases. It depends which lender who we're dealing with, or the lawyer or the notary will review the condo docs. So the lender and the insurer may just make it subject to a review at the lawyer's office, which could be debatable, arguable. It could be a very risky situation. That means you could be unconditional on the purchase, and then the lawyer finds something, and the lender can still decline the deal. So it's rare, but when it does happen, it could be very problematic. So what should you do? The solution is simple. Send the full strata package to your mortgage broker as soon as you receive it, whether they ask for it or not. Just throw it in their lap, and that way you're kind of pushing the accountability. Any issues with the building, it's like, hey, I gave you this strata pack, check it out. You should ask questions when you review your strata documents. Flag anything that you're not sure about, and don't hide any issues. Be upfront with everything to the lender, to yourself. You don't want to end up buying a lemon or some sort of unreasonable expense down the road. So it's very, very important to be upfront with everything. You're making one of the biggest financial decisions of your life. You should be just as diligent as the lender in making sure the building is healthy, the council is competent, and there are no financial time bombs that could potentially be waiting for you. Think of it as having a second set of eyes protecting you when the lender and the insurers are reviewing those strata documents. Okay, that's it for today. If you're in British Columbia or Alberta, reach out anytime. You can get me at 604-800-9593 or visit homefinancingsolutions.ca. You'll find my past podcast episodes, market blogs, and even my mortgage app, which includes calculators, rate trackers, and a quick pre-qualification feature. Thanks for tuning into Mortgagenomics Canada. Stay well and talk again soon.